Trader, good morning. Good morning, everybody. I want to apologize on behalf of Rally Trader. I'm actually waiting for somebody to start this class this morning. This is the voice of Olusegun, and I'll be the anchor for now until I'm able to lay my hand on the person that's supposed to take today's class. Now, while we are waiting for him to join us, I want to again apologize, and then I'll start immediately. So, starting with USD card. The idea or what I'm seeing here looks good too. I think I placed a buy. I think the last time we tried this. So what I see here still look good to go up for USD card. So I think USD card is still in the direction of the bulls. So you can still continue to take your trade in that direction. Let me just quickly see. Since we have trend, let's look at the stochastic and the stochastic, see what we can do with that. So this is still in the direction of buy, right? So and still on H4. But if you want to wait for the price to return to support before you join the buyers, then you can wait for the price for this the stochastic to return to 20. It's still close to 80 now, but of course it will still return to 20, and then you can take a buy. You can make a bite of that. So if you look at 1 hour, it's still not in that direction. Um, Give me a second. Sorry about that. A little bit of delay. So I'm looking at a direction of buy for USD card, but you don't have to buy now. The time we're supposed to buy is already far gone. So you need to wait for the price to return to support, and then you can click on buy. Let me give you an idea of what you can do. Class. Okay, so continue. I've been able to lay my hand on the person that will take the class, but while we're waiting for him to join us, let me continue. So if you look at this indicator right now, the time is gone for you to place a buy. It's not now. So you need to wait again for the price to return to this red line or the black line. So you can place some buy limits, okay? I do that a lot. Like if I want to stack trade now, I use this one to actually stack trades. um Apologies for my voice and everything. I actually had the conference yesterday in Port Harcourt, so it took a little bit of my strength, right? So I'm not in the right frame of mind to actually take the class. Apologies, but logging in, I can always, give you an idea of what price we do. So what you can do for USD card is to stack your trade. If you want to scalp, like I use this indicator to scalp also. Since I know the price is in the direction of buy, what I can do is to stack. Sorry about that. So let's continue our conversation very fast. I think I was here. So I was saying that if you want to make money scalping, since the direction is buy, what you can do is to stack your trade. There's something we call stacking of trade. Okay, in this region, that's in this space between the red and the black line. So the red line is actually 21 period moving average exponential, and the black line is 50 period moving average simple. So once you put it on your chart, okay, there's no other indicator you need. This is the only thing you need, and then you can, and it's 1 hour chart, and then you can now begin to stack your trade. So you can start from this region, okay, and end in this region, right? And of course, what you need to do is to put buy limit, buy limit, buy limit. You can do as many as you want. So for example, you can, all these lines can now be buy limit. All these lines I'm putting now, all these lines I'm putting could be buy limit. You don't have to do big lots. You can do all this 0.01. Now I do this a lot, okay, to scalp the market, okay, and maybe one of these days I'll teach you how to use this strategy to actually scalp the market and make money. So you need to just do buy limit in this region, that's in the mouth between the black and the red. Okay, so the idea is that when the price return, the price have potential to return to the black. Okay, the price have potential to return to the black because the black is the major support line. All right, the red is the minor support line. So when the price touches the support, it has potential to push back to the upside. Let me give you an example of what I mean. So if you look at this example, like in this case, in this scenario here, after the cross, when the red separated from the black, you can see that in this region, can you see the mouth between the red and the black? Okay, the price came back and touched the black, and then the price, revolted and pushed to the upside. So if you had done buy limit around this region, you would have made a lot of money, right? So, but you have to do it immediately the line separates from each other, not after. For example, you cannot do it in this region, right? You cannot do it in this region. It's wrong for you to do it in this region because that's a longer period. So now that the thing has just separated and has not returned, it's a good one to go. Let me fill your comment section and see if you understand what I mean. Some people say audio. I don't know what audio mean. I think my audio is good enough. Some people say they can hear me. Okay, I think, please, if you can hear me, just say yes, 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 yes. See, I want to see a lot of yes. I want to see a lot of yes. If you can hear me, I want to see a lot of yes. And I also understand, I would like to see a lot of yes. Good. So now all you need to do is to just do that. I think that would be all, since you understand that. So you can do this buy limit for the USD card. Now let me check to be sure that Emmanuel is in. Okay. Ima, are you here? Emmanuel. Please drop message in the comment section for me to read that you are here, and then of course I can read the class for you to continue. Okay, now people can hear me. I like that. Now, if somebody is asking, or Soko is asking, what about TP? The TP is maybe 10 pips, 20 pips. Well, you are doing stacking. There's something we call stacking. That means you have to do a lot of trade. Okay. Who is Emmanuel that I say is here? Okay, it's not you I was referring to. I know the man I was referring to. I'll continue the class. Okay, let me ask. Let me just ask to be sure that Ima is there, then I can give the class for him to continue. Now that you all understand. Okay, so Ima is there now. So Ima, please, you can go ahead and share your screen. Once you share your screen, my own screen will be disabled, and then you can take the class from here so that I can, do some other things right now. So Ima, we continue this class. I've done USD card analysis, Ima. So you can continue the class now with something else. And of course, I'm wishing you all traders good luck today. Green pips always. Thank you very much. Bye-bye.
All right, Mr. Sheikh, thank you.
Thank you, man.
Hi, everyone. Good morning from this side. This is Emmanuel Udogu, looking for the beautiful city of Port Harcourt. I want to believe you guys are all doing well. So you can hear me, right? A little bit sound check here. You can hear me, right? So let's just start with fundamentals. Don't know whether Mr. Sheiks have done fundamentals, but let's
No, I've not done
assume.
fundamental. Just start with fundamental. I've not touched. I only analyze USD card, so you can
Okay,
continue.
okay, okay. So just just as our custom is, we like to go through the news event, right? And lately, the news have been moving the market really both direction, both up and down, as you can see across the USD denominated currency pair. So I'll just share my screen right now with you. So just a minute. All right, guys, I've been able to share my screen. Let me know if you can see my screen. Excuse me. Can you see my screen? Okay. Let me go straight to Forex Factory right now. So we have tons of websites that we normally use for fundamentals, right? So the simplest of them all is the Forex Factory, right? To keep things very simple. So we have investing.com for those for joining us for the first time. We have tradingeconomics.com. You can equally use this guy itself, tradingstar.com, another powerful one. So you just want to see what the big players are doing in the market, right? Very, very important because we are the small players. The market is largely divided into two different categories of players. I mean, the big money and the small money. Of course, you know the market is a money market, right? So you go in with your money, you trade your money in order to make more money, right? So, but while getting more money, you also want to be aware of the risks, right? So one thing you need to do is to mitigate, is to control the risks, right? Very important in trading. So quickly, this is the Forex Factory. So it's just a calendar of news events, right? So fundamental news events, right? That cuts across major economies. By major economies, I mean major currencies that we love to trade, that we trade. And of course, whenever we look at this fundamental, we're always looking at for the volatility, right? So volatility is simply the rate of change of price with time. So we are looking at for the price to change very, very fast because in Nigeria, all of us want to make money really very fast. Of course, the way the direction the economy is driving everybody really want to make money yesterday, not just today, right? So we'll try to focus on those news events that actually move price, okay? All right, so actually what traders we do is wine and dine on the volatility. So simply put, this red flag here, as you can see, we'll call it the high impact news, high volatility news. So whenever you hear impact from any of us, any of the analysts here, from rally trade, impact means volatility, okay? So we love volatility. In fact, we wine and dine on volatility, okay? So today being Friday is 19th. Okay, so what we have right here is 17th. So what I normally do is once I open this website, I click on calendar, then of course it opens up to show us the news event for that particular week. Okay, so you of course automatically you see this calendar by the top left, right? You see this calendar by the top left. So you click on this arrow, so it shows you the news event for that entire week. Okay, so this is starting from Sunday, right, the 14th. So let me just jump right quick to what we have for today. Okay, but don't forget, a lot of news event has been rocking the market lately, right? Somebody's wondering why is US 100, why is US 2000 going up and down, just giving us two-edged sword, cutting either side, the two side of the market. So it's because of all of this red impact news. So for today, being the Friday, the 19th of July, blessed year of the Lord 2024. So look at what we have for today. So the red impact news are this one. So by 7 a.m. today, which has already passed, we have the retail sales, right? Retail sales. So okay. So these are the total number of sales at the retail level, right? So of course it has a lot to tell us about consumer sentiment, about the economy, whether consumers have money to spend in the economy, okay? That it's also a kind of pointer to inflation in the economy, whether people have money to spend. Of course, if people are spending a lot of money, we call that consumer spending, and consumer spending is a major factor in the economic growth of any nation, right? So if you see consumer spending must have dropped, that's why retail sales drop, right? Okay, as you can see, retail sales came out red, right? So if retail sales is outright like this, that tells you that, come on, that consumer spending have gone down, and consumer spending is a major driver of the economy. So that means there is something the economy is experiencing a downturn, right? Not a major one, right? But then this is equally a sign of it, okay? So of course it came out red. This red here means bad for GBP, okay? For today, right? This 7 a.m. of course we saw that GBP have experienced some weakness. Guys, I don't know whether you guys are following me. Let me check whether you are following me. So let me know if you're understanding what I've been saying for the past few, up to 2 to 3 minutes right now. Okay, fine, fine, fine. I'm trying to check whether I'm too fast, right? But then I have to be fast because I think time is really running fast. So that's retail sales. Now retail sales is not only in the UK, right? So it cut across other major economies, like in Canada too. Of course, we're expecting their retail sales again by 1:30 p.m. So I think that explanation for this covers this. What I say to one, I say to all. So I mean that explanation for retail sales on GBP is also the same retail sales for all right, let's continue, guys. Sorry about that. So the retail sales for GP say the retail sales for card, okay? Okay, so we're trying to look at the general consumer sentiment, right? Whether consumer spending is going up or down. So if consumer spending is going down, of course, retail sales will drop. So this measures the total amount of sales at the retail level. So all of these retail outlets, like for example, if it's in Nigeria, now we're talking about Kilimanjaro, Genesis, all of those areas where consumers normally spend their money. So it's a measure of the total number of sales, right? So of course, it will be if the value here comes out as red in color, that means that the retail sales is going down. So that will be a bearish movement for the Canadian dollar. Of course, something like USD card you quickly want to buy, right? You quickly want to buy. And something like CAD JPY, that will be a sell, okay? But that will be by 1:30, guys. I want to believe you also want to trade this, okay? Even though the impact is not as strong as our direct inflation data like CPI and the PPI, and of course the PC of this world. So, guys, I think that's all for today. Then by 3:40, we have FOMC, right? But this is medium impact, right? FOMC means Federal Open Market Committee, right? So one of the members of that committee, Williams, always speaking. So he's about to deliver his speech. That will be by 3:40. This might also give some kind of impact, or if you like, volatility to the dollar. So guys, I think that's all for today. What we have for next week, whether we can equally prepare for next week. Okay, next week. Okay, next week is World PMI week. Okay, Purchasing Managers Index. Then of course, the upper week will have the NFP. So guys, I want to believe you got some value from that. So let me switch over to the chart so that we can look at technical analysis side of things. Okay, so one of the ways we trade news, let me say this before I will wrap up this area and say I'll add of the day to this fundamental. So one of the ways we trade news is don't forget, if the news is good, you want to buy the domestic currency. If it is bad, you want to sell the domestic currency. So that's what we trade news. And of course, you can use the other pattern of a buy stop and sell stop, okay, to quickly rush in on the news. So I don't know who is that person that is dropping a link here. Okay, please don't do that next time, okay? If not, we can just throw you out, okay? So Oladimeji. Next time, please don't drop any other link apart from Rally Trade and of course Rally Academy. Okay, thank you very much for that. So let me share my screen really quick here. All right, guys, this is my screen. I've been able to share it, as you can see. So let me rush real quick here. Let's cover up so many things that we need to cover. Let's start from USD index. I don't know whether you guys are in love with that instrument, USD index, right? So with this USD index, you can tell what is happening to the dollar, right? So as you can see, this is H4 time frame, guys. And I want to believe most of you are trading around the dollar. Even though you are trading gold, you're trading oil is still around the dollar. Even though you are trading indices, US 30, US 2000, it's still around the dollar. So as you can see, this is H4 time frame. Each of this column here is activity for 1 week. Okay, so you can tell very well that the previous week dollar has been nosediving, right? Dollar has been weak, right? So this is one way to categorically tell what is happening to our precious dollar, right? So you can tell. So if you have seen this kind of movement, I mean, the market trending downward, and that's what we call break of structure to the downside. So please, I forgot to mention this kind of analysis is called market structure analysis. What is the structure? The structures with the highs and the lows the market is building, and the market also look forward to take out those highs. I mean, to trade above the highs or to trade below the lows. And if you look at it generally, that is what the market is built on, right? So the market is built on trading highs and lows. So if you look at it carefully, you will notice the market has been trading below the lows, trading below the lows, trading below the lows, and it's not trading above the highs. Okay, so that's what we call protected highs, if you like, protected liquidity, and the market trading below the lows is called target liquidity for a downward trend. Okay, so that particular scenario will change if we are now shifted to the upside. So shifting to the upside, we call that a market structure shift. So let me complete this drawing here, as you can see. So this was where I was the last time, right? We're here. We said there was a retracement to the upside, right? Then after this retracement to the upside, we expect the market to take out the previous low. Did it happen? Did this actually happen? Did the market actually took out this low? Of course it did. It took out the low to form a new low. So this is now our new low, right? So where is our protected high? This is our protected high. So quickly, even though you're using a phone, you can still do this. You can shade this particular portion, right? So this is our protected high. It means it's mechanical trade, you know. It means until this high is taken out, we are still going down. So until this high is taken out, we are still going down, guys. Okay, so this high has to be taken out, right, before we say we have experienced a shift. Now, don't forget, this is H4 time frame, so that means this is a swing trading analysis, right? But then you can still use this on your day trading because this is what drives our day trading. Okay, guys? So this is our strong high, right? This is our strong high. Why? Because okay, just cast your mind backward a little bit. Remember what technical analysis is. We analyze the left so that we can trade the right. I hope you understand that. So we analyze the left so that we can trade what is on the right hand side. So just cast your mind back. This was all equally what we call a strong high, right? So the market did not trade above this high. So the market have established a strong high, right? So probably the market will just go up like this and try to kiss this high, right? And try to kiss this high, and then it will not fall, right? It will not fall. But from what we are seeing right now, remember, you trade what you see. You may want to write it down. You trade more of what you see than what you are anticipating. You trade more of what you see. Now, trading what you anticipate is also good, but if you notice the action word there is more, M-O-R-E, more. You trade more of what you see. What are we seeing? We are seeing the market is breaking the lows, but we are anticipating that it might take out this high so that dollar will return back, and start recovering from all of its losses, right? So if the market take out this high, right, it shows strength coming back to the dollar, right? So guys, keep your eye on this one. But for now, the dollar is showing some level of strength, as you can see. Okay, so all of this movement upward is some level of strength on the 15 minutes time frame, equally on a 1 hour time frame, right? So all of these are levels of strength, as you can see. Now, if you are to trade only the shaded portion, okay, so we call that equally an upward trend, guys. If you move to a 15 minutes time frame, 5 minutes time frame, this is an upward trend because we are already seeing higher highs and of course higher lows, which characterize the market breaking structures to the upside, right? So that means we are already seeing momentum being pumped into the dollar from the lower time frame. But don't forget, all of this movement is only a retracement, right? It's only a retracement leg, right? And retracement may not really last, right? So you have more confidence you have more confidence to trade the dollar, to buy the dollar, if we have broken structures to the upside. So I think you understand that, right? All right, guys. So let's leave this one for now. So what have we concluded here? We have concluded dollar is still on a downward trend on the H4 time frame, but we already say for retail traders, most new traders are retail traders. Most of us here are retail traders, meaning that we are targeting to make profit for that particular day. If we place trade and the trade has passed 15 minutes, 1 hour, and we are sitting negative, most of us are really very worried. So that is how to know whether you're a retail trader, okay? So I think from what I've explained, you can now tell that you're a retail trader, okay? So for retail traders, want to use 15 minutes, 30 minutes. So that means we're already seeing the market trading and pushing to the upside, guys. So let's leave USD index, right? So that means the trend is actually mixed for now, right? It's mixed for now. In the long run, in the long term, it is still bearish, but for a retail trader in the short term, we're already seeing a lot of strength, which you can cash in on it, okay? So I think that's for USD index, and my senior colleague have analyzed USD card. So which other instrument do you think we can run through here? So let's do Euro USD if you want, or let's do GBP USD, right? So touch more to currency pair before we drive. Okay, you want us to do gold. Okay, I'll do gold now. But then let's do Euro USD first. Or you guys don't trade Euro USD. Or it's too easy to trade. So you don't run to the difficult area. You stay where so quickly, this is Euro USD, guys. So how can we tell if we have shifted to the downside on this Euro USD? So quick one here. So following up what we normally do, if you have been following this up, so this is impulse to the upside, this is retracement to the downside. See how much it retraced. So very small retracement. That's a sign of momentum is still very strong. So let's call this too high, the impulsive leg to the upside. Then this is a retracement leg to the downside. If you notice, it was coming down, it respected this low, right? So it stopped somewhere here. So where is the new target? The new target would be to take out this high. So it took out that high to form a new high. So it's not coming down. So ideally, we're expecting it to respect this low for us to continue the upward trend. So this is still considered a retracement leg, as you can see, right? But retracement are in varieties. So we can have internal structure analysis. So because if you look very carefully, you can see that the volume of candles coming down are very massive, right? And red has been following red and upon red and upon red. So there is some chances, there is up to 70% chance that we might take out this low. But guess what, sir? Trading what you see on the chart, this low becomes our strong low. Now, this software is calling it weak support, right? But from structural analysis point of view, this is our strong low. Strong low because this low was responsible for taking out this high. Which high? This target high, right? So it was this low that was responsible for taking out this high, grabbing the liquidity there, and of course, taking it out completely. So this is actually a retracement. So we might just be seeing another movement like this to the upside, right? Okay, except that we might equally break through this low, okay? So one of the trades you can take here is on this H4 time frame. You may want to take the trade very much closer to this low, okay? Very much closer to this low and have a very tight stop loss. That might just give you maybe 1:5. Come on, that kind of trade is a sweet trade. You risk 1 to make 5. So the more closer you are to this particular low, the more the risk to return ratio. So guys, you guys are dropping a lot of okay, I think it's time to take out this Oladimeji. You have to leave right now. So my guy, I think I won it the first time, but still continue on this your part. So Mr. Oladimeji. All right, guys. So this is what we expect. So we expect it to come much closer to this. So that will give you opportunity for doing what we call 1:5 or a risk small to make a very big returns, right? Okay. So even if it later get to hit your stop loss, it is still a good trade because it will give you this kind of opportunity, right? As you can see, you risk small to make something big, okay? But this particular trade may not really happen for this week because today is already Friday, okay? So we look forward to next week. But then guess what? It can equally take out this low, okay? Taking us to a new side of the market. So that can take out this low. And of course, we have shifted to the downside. So on 15 minutes time frame, guys, let's look at what we can do on the on Euro USD for today. Okay, so it is very important to mark out this area, as you can see. So this area we have mapped out like this becomes our strong low. Okay, on this 15 minutes time frame, as you can see, it is called verify support here. Okay, so one thing you want to do is even though you wish to sell, why? Because we're already riding a downward trend on the 15 minutes time frame. So if you want to sell, your take profit must have to be on this support because you know from the higher time frame. In fact, that's the advantage of using the higher time frame. You know from the higher time frame, this area is actually our strong support there, as you can see. So guys, that is what we can do for Euro USD, right? So what can you do here? You can wait until the price properly come much closer to this level, right? So I think I'm already seeing what we call I'm already seeing what we call a I'm already seeing what we call an order block there. As you can see, that's an order block, right? So that means the price has already bounced off the order block the first time, right? So, but I need it to come inside it again so that I can have very smaller stop loss. Then I'll just do a buy. Or if it breaks through it, now if it breaks through it, that is when I will now start thinking about selling because I'm trying to trade what we see on the chart. Okay, guys. Now let's do gold or let's do GPUSD. So this analysis may not really be far from what we have on GPUSD. So for GPUSD is more volatile because we have already broken that strong low, right? As you can see, the strong low has been taken out. So that it happens faster or it moves faster than what we have on Euro USD, right? So this is the retracement leg to the downside, right? The most recent retracement leg to the downside, and this is the impulsive leg to the upside that took out this high Then, of course, if you watch carefully, closely, the market has traded below this low. We are now rocking a new low, as you can see. So this is already the shift, the market structure shift we're expecting, right? So GBP/USD has happened very fast, faster than what we have in Euro/USD. So in that case, guys, on the lower time frame, let's do 15 minutes time frame. On the lower time frame, so let's see what we have here. Okay, but from that 15 minutes time, from that H4 time frame, guys. So let's clearly map out this our strong low that has been taken out, right? So I will just highlight that. So look at where I'm highlighting. So this area, this particular what we call shadow, right? This particular shadow is a strong market sentiment, right? So I'll just highlight that area because most time the market tends to reverse around this area. Okay. So how do I mean? So if you watch carefully, we have one around here. So that was the area that the market came to touch. As you can see, this particular week, right? So if you notice when this market was coming down, it came towards this particular week. It tapped this week before taking before moving up. So weeks on the market are very, very important area on the chart. Okay. So remember, it is the weeks that also the weeks are like the neck, right? Or it is the weeks that leads to the highest and the low. So the weeks are also very important in trading. So that means, as you can see carefully, we have gone through this low, right? So that means this area will now be serving as our resistance, right? So that means an area where the market want to tap more premium prices, and of course, so that it can now go down further. So 15 minutes time frame now, guys. So on this 15 minutes time frame, look at what we are seeing right here. So if you notice, if you do this kind of analysis and you drop down to a lower time frame, the whole chart becomes the whole chart becomes or looks much easier and better. The whole chart looks much easier and better, right? By better, I mean, look here now, look carefully. It means if this price retraces into this area, I will not be afraid of selling, right? I may not be afraid of selling. Very simple, guys. I may not be afraid of selling. Why? Because I know very carefully, I know very well that on the higher time frame, H4 time frame, this area is our strong low that has been broken. Of course, it is now acting as our supply zone. Okay, so I would like to do a sell anywhere around here. I would like to do a sell inside this area. So this area 1.29490, right? It's a range 1.29423. This area becomes my area of interest, AOI, area of interest. So that means the market should just give me another premium price. So if you watch carefully, it has happened before. Let me show you this. That's happened before. Now, this analysis is for those of us day traders, right? If you like scalpers, okay? So look carefully. The market has given us that opportunity before. See where it traded out of this zone to this low, to this area. Then, of course, see where it traded into that area. So what happened? Immediately came inside this area. Can you tell me what happened here? It means there are other traders all over the world that have done this similar kind of analysis, right? Because that is what trading is all about, right? It's more of psychological move, right? So you doing what majority are doing, or by majority I mean in terms of volume, you get the same result. Okay, so in this case now, if you notice it entered inside this area, then what happened? It quickly, and that was very, very fast. So it quickly left that area, caused a break of structure very fast to the downside. Okay, so I remember any move that causes a break of structure is a strong move. That area where it's coming from is a strong area. I don't know whether you guys are really getting value from this. Okay, so if it retraces inside this area again, I would like to do the same thing again, but then we have already seen the break of structure. So trading if entering a sell right here is still a good sell, but then it is an aggressive sell. All right, so a more conservative sell will be waiting for it to retrace again. So guys, let me do your gold right now. Gold. So you have mentioned gold earlier, so let me honor that request because you have asked nicely. Okay, so this is good, guys. So don't forget the way we analyze here, the way I do and my analysis, as you can see carefully. So gold has been purging to the downside, guys. Now, apart from doing analysis, you have to understand by yourself, right? You have to know when to take your profit, when to close your trade, right? When not to take a trade. You have to know these things. If not, most persons will just be saying, analyze this one, analyze that. Why? Because they are running on a negative that they are not seeing, right? They are not seeing a negative, not seeing a negative. Don't nurse negative. Any negative you're nursing has become a very big negative, right? Or big loss or big potential loss. And you don't want to get into the point of you nursing a potential loss. No, you don't nurse, right? If you nurse, then two things will be happening to you. Number one, you'll be missing out on the new opportunities. Why? Because your attention, your focus is on that particular trade that you're nursing. And remember, on this spinning planet, whatever you give attention to, whatever you focus on, you energize it, right? You give it more power over you. So you don't want to get to that point. Okay, fine. So the reason why I'm giving this analysis is because gold is already trying to push towards the downside because it has gotten to an all-time high, right? As you can see, gold have touched 1.48, right? Getting close to, sorry, 24, right? 248. So it's getting close to 25, right? That's really an all-time high. Okay. I remember anytime we trade into an all-time high, is usually what we call a bubble, and a bubble will always burst. Take note, guys. If you're going to be trading for the longest time, anytime we get into an all-time high, a high that has not been reached for a very long time, is usually a bubble, and a bubble will always burst. Same thing happened to GBP USD. If you notice, we touched 1.3, right, guys? Now, for you to do well in this industry, you also have to be focusing on the prices we are rocking. So if you look at GPUSD here, we touch 1.3, as you can see, guys, right? 1.3, right? So that's really an all-time high for a very long time now, okay? So that all-time high, of course, it will attract market sentiment, right? So once you touch any all-time high like that, guess what normally happens? So it's usually a bubble. So that was part of what caused this move to the downside, right? That was what is part of what caused that move to the downside. Okay. So quickly over here on the GPUSD, I would like to take a trade here. Okay. Let me take that the aggressive one. Okay. So but then if you retrace up further to this area, I would still like to take another more trade inside this area. Okay. So of course from this, my stop loss will have to be above this high. Then my take profit we have to be minimum ×2 of that distance. I just came back here. I know the spirit can lead. So this ×2 of that distance. So but then this is how I normally trade. I like to stack, right? I don't go all in. So if it retraces further inside this area, I'll enter more trade from what I've explained previously. So guys, that's a trade on GPUSD there. So I'm not through with gold though. I was explaining something on gold. So follow me closely, okay? So I was talking about an instrument trading into an all-time high or trading into a high that has not been reached for a very long time. As you can see, this is the highest price for this year, right? So that's the high for the year. And of course, if you look at it carefully, it's also an all-time high. Okay, so that is why we're experiencing. It's part of the reason why we're experiencing this bubble burst, right? The bubble burst. So let's jump down to 30 minutes time frame so that we can see things much clearly from the retail perspective. So guys, you guys are still with me, right? From the retail perspective, we'll do a little bit above 9 so that for the time, right? For the time. So this is a downward movement, right? On the retail perspective, as you can see. So that means if you have a sell trade, you can still leave your sell open, be rocking it to the downside, right? Okay. But if you have a buy, what can you do? So that's where the analysis should start from. The analysis should also cover already existing trade, right? Already existing trade. What should I do? Because analysis is not only when to place a trade, analysis is also this my trade that is running. Should I close it or I should leave it open? It's also part of analysis. So you do analysis to place a trade, you do analysis to stay on the trade, right? To stay on the trade. To stay on the trade, because most persons rush to close their negative trade and later it turns to profit, right? So you do analysis to stay on the trade, then you do analysis to know when to exit a trade. So guys, look at this area. This area are quite powerful area. Can you see this week? Okay, so look at this week, right? This week also rocking the second week. So this area is a very powerful area. So remember, weeks are very strong areas on our chart, right? So these areas are very powerful support areas. So that means the price dropping further inside this area, right? May experience some kind of market reactions, right? Market reaction that may want to push it further upward. But away from that, let's drop down to 50 minutes time frame. Let's see what we have there, guys. So on 15 minutes time frame, we are clearly seeing the market rocking to the downside and being trading to the downside, as you can see. But don't forget, this is the area I pointed out, right? So on this lower time frame, 15 minutes time frame, you can now know, if I'm to take a sell, this is where my trade should be, or this is where my take profit should be, rather, okay? Now, but if you look at this 15 minutes carefully, okay, so we have broken structures to the downside already. By that, I mean, this is the impulsive leg to the downside, and this is retracement again, right? So this is just a little retracement. That shows that momentum is still very strong, guys. So this is another impulsive leg. So let's take this one. This is another impulsive leg. So this is the high we have to trade above, okay? So for those of you that you are itching in your body, this thing have gone down too much, I'm waiting for it to start trading upward. So don't enter buy yet, right? Don't enter buy yet. So wait until the price can trade above, for the retail perspective, guys. Wait until the price can trade above 2429, 2.29, 2429.43. If the price trade above 2429.43, then you want to start doing your buys, okay? But for now, we are still rocking it to the downside. So that means you're free to enter a sell. You're free to enter a sell with stop loss above this high, right? For a retail trader, remember, this analysis is for retail perspective, right? So you are free to do a sell, right? Stop loss just above this high, and of course take profits on this level, okay? So remember, USD has been down for a couple of days, so it's just trying to recover, right? So that is part of the move. All right, guys. So the next thing to analyze is maybe US. Okay, you mentioned US 30. So you said USD JPY. So let's do USD JPY for you. You have mentioned that nicely. So let's look at that. USD JPY. So this is USD JPY, yeah. So still on the H4 time frame, let's see what the market is telling us. So on this H4 time frame, as you can see, this is still considered a downward movement because the market has just taken out this low to form a new low, right? Retracement to the upside, then of course break of structure again to form a new low. So this is still considered a downward movement, trading what to see on the chart, right? So trading what the market is telling you. So this is still considered a downward movement, right? So we have not experienced break of structure on the H4 time frame. Okay. So that means this is only a retracement to the upside. Okay, and then we are experiencing another, we are expecting from the chart analysis another impulsive leg to take out this low, right? So this is what the chart looks like for now. Okay, but then what we are seeing right now, we have just retraced very well to the upside, as you can see. So this is a retracement to the upside. So on the lower time frame, 15 minutes time frame, we should be able to see what that retracement leg holds for us. Okay,
So this is considered a retracement to the upside, but for a retail trader, this is considered an upward trend. Okay, so you now trade from that perspective. Now, but while you're trading from that perspective, you already have in mind that this is still considered a retracement leg. So that's how you trade, such that you don't now leave your trade to run for too long, because you are aware that the higher time frame is still on a downward trend. Okay. Now, if you notice carefully, we have been able to trade below this low, right? So we grab the liquidity below this low. So that means that might just introduce some momentum. Okay. So still on this, I would still like to take a trade, and of course that's a buy, right? So on this retail perspective, you can guess that we saw USD index analysis, right? That we saw some strength infused into the dollar, even though it's a retracement leg, right? And this is a stop loss here, right? So this becomes 1:2, right? As you can see. So guys, this is for USD JPY. So thank you very much for that. Okay, so we try to make it very, very fast here, because time is really running fast. So I think I can see your comment, guys. You guys, some of you are following, some of you are not. Some of you are saying the analysis is good. Some of you are saying it's not. That's fine. Thanks for all of the comments here. So you say USD card. I think that USD card analysis has already been done, right? So we try to go in more into the 9 o'clock hour, because started a little bit late. So I'm trying to do something here, everyone, please. All right, guys. So we've been able to take this trade, right? So look at the trade we took here. So we took a trade on we took a trade sell, right, on GPUSD. Then we took a trade buy on USD JPY. And then we're able to put stop loss and take profit on them, guys. So let me leave my number here. So let me leave my number here. My name is Emmanuel. So if you have further inquiry, you can do where to reach out. You can do a WhatsApp message, right? So you can do a WhatsApp message first, okay? Always go with WhatsApp message first. And when you do, you will say my name is, you start with my name is, you tell me your name first. You know my own name. Most person will just start chatting with you without even telling you where they're calling from. You say my name is So guys, Victor, thank you very much for that. I think the trades are not I've dropped the number, please. Okay. So let me drop the number again. Sorry about that. So you just do a WhatsApp message, guys. Just do a WhatsApp message. Thank you very much, guys. See you. Join us again on Monday. 8 a.m. is the time. Bye for now.